So good afternoon, everyone. Um, this is Tiffany Rucker of All Aboard Financial, where I help small business owners plan for all of life's certainties, taxes, death, and disability. Maggie and I are tax sisters. We are two separate businesses with one goal. And so our goal is to share with you guys tax information to keep you legally, ethically, and compliantly on the right financial track. All right. So I'll let Maggie also introduce herself and then we'll get started.
Good afternoon, everybody. Just like Tiffany said, we are tax sisters coming to you today just to give you pertinent information about everything and anything finance related, really. We're both qualified in various aspects of the financial sector, which is really big, but also helpful because we can kind of help you with all the different uncertainties that can come up. I primarily work with business owners to reduce their biggest expense, which is taxes, like we said, legally, ethically, and compliantly. But yeah, that's me. So what we talking about today?
So today, guys, we are going to talk to you guys about bookkeeping and why it is so important for you to have it. If you are operating a business and you do not know your expenses, you aren't sure of your income, that is a huge problem. And Maggie has a really interesting case study that we're going to talk about today and show how the bookkeeping feature and the lack thereof, or making sure that you have everything that you need to track your income and expenses, because it does matter. Whether you are applying for a loan, whether you are looking to purchase property for your business, whatever it is that you're looking to do, that bookkeeping platform is going to be extremely important. Okay, it tracks everything from your equity in your business. That's what you put into your business to grow your business. Then it looks at your expenses, your revenue, and then any assets that you have. The bookkeeping platform that you use will be able to monitor all of that. So typically people hear about QuickBooks, right? That's the one that we use that's more popular. There are a couple others out there. QuickBook is one that I use. I think, Maggie, you use it as well, right? It's one of the leading ones, and it's really effective in making sure that you understand how your business is doing from month to month. I check in with my business every month because I just like to see how we're progressing
Hold
along.
on, Tiffany. Lee, if you're on here, can you drop a 1 if you can hear us? Because Mama D said she couldn't hear. So I just want to be sure that our audio is working.
Can you hear us? Y'all don't make me start singing.
That's another hidden talent you got.
Girl, listen, you do not want to hear me get on here and sing no kind of song.
He sent
anybody?
Okay, he can hear us. All right. Sorry.
He can hear us. All right, good. Thank you, Lee. So I was just saying, be sure to, as a business owner, it's important that you understand how your business is doing. This is not something that you do just at tax time, right, Maggie? Because that's something that we talk about all the time with business owners. You don't think about taxes at tax time. No. You need to be planning taxes over time throughout the 12 months of the year, so that way you're not hit with an astronomical bill, and B, that you aren't sideswiped by, oh my gosh, there was some income missing, or there was some revenue that I I thought I earned, or an expense I thought I paid. And so tax time is not the time to do that. You actually want to be tax planning prior to.
Correct. So yeah, it's really important to just go through and make sure that you are having a handle on what's coming in, what's going out, you know, tax planning, figuring out what your tax liability might be, aka your tax bill, if you have one, if you don't have one, if you're getting a refund, why are you getting a refund? Things of that nature are things that you want to already look for, plan for, and go through. Especially now we're at the halfway mark. I can't even believe it. We're halfway through 2022, right? And you want to see where you're at in the beginning of the year. You want to make sure your books are up to date. I know with my clients, I meet with my clients every single quarter to go through and see exactly where they were at for the first quarter. That helps with estimated tax payments as well, because if you are looking to start owing and we just haven't generated incomes, we can go ahead and avoid fees and penalties by go ahead and cutting a check to the IRS right there and then. So all of that is important to be sure that you can just stay compliant and have no problems with the IRS.
Correct, because nobody wants trouble with the IRS. It is not fun, and I can tell you from experience with dealing with a shade tree tax preparer that having those letters sent to you, it is not cute. Matter of fact, it hurt your feelings real bad, deep down in your spirit, up down in your soul. Okay, so it's important, as Maggie said, to remain compliant. And so bookkeeping is not just about, just putting some numbers somewhere. Those numbers mean things, and we can then generate reports such as income statements, profit and loss statements, balance sheets, things of that nature. We can then generate those reports and let you know, hey, let's check in with the health of your business. So the same way that you go to the doctor to check on your regular health, you have to check on your financial health of your business. If you're not checking in, like Maggie said, you'll get to the end of the year and there may be some penalties or fees or maybe something that you missed along the way. And now we're trying to play cleanup, which is more expensive.
Way more expensive. Because those fees and fines add up real fast, really fast. So you want to be sure that you're, dotting your I's, crossing your T's, where everything is and where it's going. And especially in case of an audit, in case of just even if you're going up for financing, that's another part of it. We talk so much about the IRS and, their implications and everything, but there's also other entities that care about all of this. If you're trying to get financing, the very first thing, whether you're up for a certification, grants, you're trying to get a loan, they ask for these things. They ask for a financial statement. They ask for a balance statement. I always say, if you don't have to get ready, you stay ready, right? I always say that. If they hit you with we want to approve you right now for $25,000, but you need to provide us with the statement. Are you ready? Do you have it? Do you know where to get it? Because that can delay you. That can delay you from being qualified for these things. If you have a time limit on these things and you haven't even started, now you're coming to us as professionals. Hey, I need all of January to June, all these thousands of transactions categorized, and you're looking at us to do it in this time crunch. Now you're paying even more money because you having us do it in a limited amount of time, where we could have been doing it over time and letting you know where you're at. So it's really important for that aspect of your business as well.
And also, guys, we're human, okay? And so because we are human, if we're rushed, you want to make sure that your finances are accurate. You don't want to rush your tax professional, okay? Right. You want to make sure that they have time, reasonable enough time, to review your documents, to go over all of your transactions. This is where we will pick up on certain things. There may be something that was omitted, or maybe we are familiar with your business and know that, hey, you had this really big sale. Like, where's that information? Why don't I see that? And so this is the importance of having the consistent bookkeeping because of the follow-up that you'll get along with it. So it's not just about us putting your numbers to a category, it's also that advisory piece and walking you through and educating you on how to go about making adjustments. Like Maggie said, there may be an adjustment that you need to make in your finances to reach certain goals, or if we know that there's going to be a large tax bill, we can then talk about, hey, you need to pay quarterly estimated taxes, so that way we aren't, you aren't faced with that call that says, oh my God, I owe this amount. Why? So we don't like to get those calls. We want to make sure that you guys are, up to date, know what's going on with your business, check in with the financial health of your business.
Yeah, super important, you guys. Another part of why bookkeeping is important, even if you're an individual, this is something that I just thought about. Most people don't know, but there's two different deductions, right? There's standard deduction or itemized deductions. If you're going through something medically, that's one of the biggest things, right? If you're paying a lot of out-of-pocket costs for these type of things, you want to keep your receipts for those things. You want to keep them organized. You want to keep record of them, because there may be an instance, knock on wood, as we say, but there may be an instance where for that year, you've paid way more than what the government standardly gives you as a deduction, and that can help your situation. So even as an individual, bookkeeping can be very important for that, to see if standard deduction is better for you or itemized deduction.
Correct. So again, it's the advisory aspect that comes along with the bookkeeping, and typically for clients, like Maggie said earlier, quarterly check-ins, are good. Some people like to check in a little bit more, monthly. Some people are real specific and they want some weekly check-ins. And it really kind of depends on your business, right? If you have a lot of transactions going on, maybe you are expanding, maybe you're working on a specific project, there may be a need to go ahead and review a little more frequently than the quarterly check-in.
Right. So Tiffany, standard small business, what type of things should we be tracking for bookkeeping?
So really you really want to keep track of income, and a lot of people like to commingle their funds. They like to have business things going through their personal accounts, which is a no-no. Okay. Big no-no. Don't do it. Maggie and I are telling you, don't do that. But that's one of the biggest things that we need to be looking at, how much income is coming in. And then we want to keep track of our typical expenses. Some of the expenses that people tend to forget about, is the common theme, is like monthly subscriptions. So things like your website, things like if you are part of maybe an organization, there's a due or a subscription that comes out every month. People tend to overlook them because, number one, they have them going to a personal account, and number two, they aren't calculating. Yeah, they aren't calculating or including that in their budget. So the bookkeeping also helps with the budgeting aspect for your business, because if you are certain of what's coming in and going out of your business, it's going to help you paint a financial picture to know whether it's time for you to expand. Maybe it's not time yet. Maybe you have all these wonderful ideas, but financially you just can't support that right now. So understanding that the transition of what's coming in, what's going out, is going to be very important. Other things that I noticed that people tend to not calculate, or they don't look at it as an expense for their business, is mileage. A lot of us are not.
We got some changes on that part.
Yes, a lot of people are not tracking their miles. And that's one of the things that people overlook often, very often. So if you are, I believe the change, it's going up to 62.5. Is that right, Maggie?
Mhm.
Yep. So it's 62 and a half cent for the mileage. That's something that you can track very simply. I use a app called Mile IQ.
Mhm.
Once you set it up, you carry around your phone. Y'all carrying around your phone anyway, chit chatting and
So will you.
texting and things. So you just put it in your bag, your purse, or your car. You drive, it tracks your miles, and then you swipe. I believe it's left for the business and right for the personal. I might have that wrong, but either way, it's a simple swipe. And at the end of the year, it generates a report for you. So it's very important to keep track of your mileage. Now, do not say that you went to the club for business unless that's your business, okay? So make sure that you are that's one of the ones that people typically overlook. Any other things, Max?
Those are the main things I would say that come up. Another thing is there's some things that are like gray area, right? Like if you have a home business, a lot of people ask me, well, can I deduct my rent? So your home is primarily used for living. However, it's recommended that you have a space in your home that is solely for like your office space, what you do for business. And that you can deduct as a home office deduction, but you cannot deduct your rent for your home, your apartment, or your mortgage solely as a deduction, right? Another thing that's kind of in the gray area is cell phone, internet. Per IRS code, it depends on how much percent of that do you use for business purposes. So that's more so can kind of go into operation side. Like if you actually track how long you work throughout the day in your space, that can help come up with your percentage. So those are a couple of things that are usually in the gray area people always ask me about. And I think it's good to make it more so black and white now, like how you should take care of those type of bills.
Absolutely. Yeah, that is a common one. And also you have to account for, like Maggie said, knowing how much time you're working in that space is helpful.
Yeah.
You can't just say, oh, I work, 100 hours. Well, is that true? How do we know that? How are we verifying that? So it's important that you do keep a good handle on how much time is spent, because we do have to, as tax professionals, calculate and look at, okay, what percentage was this person using their cell phone or their office space for their home office or their internet or whatever for business. Are there any questions, Mags? I can't see the.
No questions as of right now, but let's open it up. Let's give it about 30 seconds. If you all have any questions, definitely drop it in the chat. I am looking over to the side, trying to see if there's any, but there's none right now. Okay. We'll give it a few minutes or seconds, I should say.
My husband says, thank God he has a tax professional in his house.
Yes.
I got you.
Right. Awesome.
All right. So no questions so far. So I want to go back to quarterly taxes. Just so that we understand, that you have a specific deadline. So the same as you have a deadline for your federal taxes, there are deadlines for your quarterly estimated taxes, guys. So just be mindful of those. I believe for this year it was April 18th for the first quarter, June 15th for the second quarter, I believe third quarter is September 15th, and I think the fourth quarter ends January 15th. But somebody will correct me if I'm wrong on that. But here's a question. Can they write off everyday clothes they wear in their business? That's from Mama D. You take that one, man.
No. It depends on, so deductions overall, right? It's what is normal and necessary for your business. I get it. It is normal and necessary to wear clothes, but that's not something that can help or make or break your business, I think is a good way to look at it. Now, there are some type of businesses where it is very, 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 very usual and necessary for their business, like influencers, right? We live in the whatever century we in now, 20 whatever. And but there's new job titles that people have not heard of. Like there's YouTubers, there's influencers, there's all these things that traditionally we wouldn't have labeled as a job title. But if you're an influencer, that's a big part of your business. You have to look a certain way. So those type of things, you know, if you're doing it you're shooting a promotional video or what have you, then those things are usual and necessary for your business. However, everyday Joe Schmo, you know, me and Tiffany sitting behind, even though we, you know, we're presenting ourselves to the public, but this is not make or break in our business. It's not usual and necessary to run a tax business. You don't need to have a certain accessory. But yes, just like Mama D said, branded clothing, that is something different as well, because that's, you know, a part of your business. That's essentially like a uniform. So those type of things you can write off as well.
Absolutely. And going back to what Maggie said, you know, making sure that it depends on your industry, and then it also goes into what's necessary or usual and necessary for your industry type. Okay, so we have to take those things into account when determining you know, what can you use as a deduction. But absolutely, branded clothing, anytime you're presenting yourself and you have on, you know, you have your shirts or you have custom shoes or whatever to promote your business, you know, then you want to make sure that we're accounting for those things as well.
So Andrea said, after calculating how much time you spend in the home office, how do we know what percentage of the rent/mortgage can be deducted for tax advantages? So for those, it's two different things. Home office deduction is solely based upon the square footage of your home and how much your dedicated space's square footage is. And those are the two things that we populate, and then the deduction is based upon that. Now, how much time you spend working and utilizing things like your cell phone or your internet is where tracking how much time you spent comes into play, because then you can say, okay, this is how much time 24 hours of my house, or, you know, what have you, out of that, I'm spending 8 hours a day. That's, you know, third of everything. And you calculate it that way.
So is it Andrea? It kind of depends. So we have to look at, like Maggie said, specifics on your square footage for the home, and then also looking at the amount of time that you spent, and then we have to look at IRS rules and regulations, and then that's how we come up with those calculations. So it kind of is one of those things where we have to run the numbers.
Correct. Yeah, so home office deduction is based upon square footage. It's like a standard deduction, kind of like mileage. situation, whereas deducting expenses such as certain utilities that are shared between personal and business use, that's where that type of tracking comes into play.
Absolutely.
All right.
And
the
Mama
numbers
D,
have to
the
match
numbers
up.
have to match up. Yes, it has to make sense, guys. It has to make sense.
With
You
a C
can't.
as well, makes sense as well.
Yes, yes. It has to make sense with the C and sense, comma.
Yeah, right.
So
Yeah.
you can't,
But I
just
think that's a good time to go into the case study, because the case study that I'm going to go over today, like, goes over a lot of these things. Before I jump into it though, Tiffany, did you have anything else you wanted to go over?
Nope, we can jump right in.
Okay, so this is the case that came across my desk, and I was like, ooh. So the person R is a self-employed mortgage broker who filed a Schedule C. She owned rental properties and also filed a Schedule E. On both schedules, she deducted vehicle and meal expenses. However, the IRS denied most of the expenses. So that's the situation that we have on hand, and I'm going to go over why. When they went to court and everything was debated, partial things were held to the IRS and the other part was held to the taxpayer. So this is how it broke down. So to support the Schedule C vehicle expenses, the taxpayer provided a log of trips in the vehicle based on a notebook where the taxpayer said she kept her travels, but the notebook was unavailable to the IRS or court. So the log was incomplete. It lacked precise destinations, starting points, and business purposes of the trip. So the court disallowed all Schedule C vehicle deductions.
Oh boy.
So when you're preparing your return, when you're going through and getting ready, just because you have it written down somewhere doesn't mean that it's going to uphold in court. If they come and say, nope, we're not giving you this deduction, and you try to fight it, there's no evidence. Putting it in a notebook is not a good way to track mileage. You have to have the app, like Tiffany said, or some sort of other way to track it. Putting it in a notebook is not it. And just tracking your miles, like, oh, it took me, whatever, 3 miles to go from point A to point B, also is something that we have to realize is not going to cut it either. They also said that it was incomplete because it did not state the purpose of the trip. So you have to.
I'm sorry, Meg. I didn't mean to cut you off.
Go ahead. You're gonna say.
No, I was just gonna say, and that's the reason that we stress, keeping good records, because just because you are writing it down by hand, anybody could have done that. Okay, your child could have put 6 miles, 6-8 miles or whatever.
Yeah, and the court doesn't know. You could have looked, you run into these situations, right? You didn't do tax planning throughout the year. The IRS says you owe them $10,000, and now you stretching and scrimmaging and looking all over trying to figure out how can you make this bill lower. And that's the first thing that people draw to. Well, I'm gonna put, I've drove 10,000 miles or whatever, and you have no evidence to back it up. Now the IRS comes to you and they're like, 10,000 miles where? And you don't have any proof to give to them. So this is just importance. Again, get the mileage tracking app, save yourself all the trouble in the world.
And to the point in that case study, the destination and purpose is important. Like, what purpose did you travel? A lot of people like to leave that out. They don't like to disclose, what they were doing. I had someone ask me recently about, he wanted to go on a retreat. And I asked him, okay, well, what are you going to be doing at the retreat? And he couldn't give me an answer. So then I said, so if you come, if you were to get audited, what are you going to have for the IRS? What rebuttal would we have to give to the IRS? If you can't tell me the purpose, then your purpose is probably not valid. So make sure that when you're making those trips for business, that you are actually taking care of your business, that you're actually doing something for your business.
So on the other hand, the Schedule E vehicle expenses, the taxpayer had a more detailed log because her rental house was being renovated and most of the trips were from the rental to Home Depot to purchase materials for the renovation. This made it easy to establish the exact mileage and purpose of the trips, and the court allowed those deductions. So, case in point, why you want to have the reason why you're going, where you're going, that makes it easy to allow those type of deductions.
Correct.
Another thing I want to stress about mileage is you can't double dip, right? So if this specific taxpayer had her Home Depot trips also on her Schedule C for her mortgage broker business, that would be a big no-no because it really depends on what you're, doing it for. So if you have multiple streams of income, you also want to have clean books, separate things that you're tracking depending on the stream of income that you're looking at.
Correct. And that's a really good point, Maggie. A lot of times people have multiple businesses and they think that because they are the owner of said multiple businesses, that one set of bookkeeping does it for every business, and it does not. You need to have separate bookkeeping for each business, separate mileage tracker. You want to make sure that each business has its own set of bookkeeping, mileage, all of that, and records, because you may have to present it in an audit situation, but also for banking, for loans, for whatever. So you can't just group everything together.
Correct. So the other part of the case study goes over meal expenses. So for Schedule C meal expenses, the taxpayer said she often purchased meals for herself and her clients if she worked on their loan applications during meal times and offered a log, credit card statements, and restaurant receipts. But the log was not contemporaneous with the expenditures and lacked the business purpose and the taxpayer's relationship to the dining companions. So the log did not meet the requirements of IRS Code 274, and the meal deductions were denied. So this is a whole nother part of tracking as well, because we think that we can just tell them, oh yeah, I went with my clients out to eat and it was during meal times and they were there, and we can just write it all off. No, you also, and even though she provided the log, the credit card statements, restaurant receipts, that still was not enough. She lacked the business purpose and who the people were that she was dining with. And that by itself allowed for the meal deductions to be denied.
So in other words, don't y'all be out there at the Chick-fil-A, okay, at the McDonald's Burger King, having meals, talking about it for your business. Really, the business meals, they need to be relevant to what you have going on. So, in a situation like that, you want to, if you were going to review some business, a business project, if you were going to take a look at your business financials or whatever, the meal has to coincide with whatever is going on with your business, guys. So that's really important. That's a really good point. And poor lady, my goodness.
I feel indifferent. I feel like poor lady too, but clearly she was keeping a lot of these logs herself. And that's why she missed a lot of these things. Now, It doesn't mean that every single bookkeeper out there or tax professional is so thorough that they don't miss things, but 9 times out of 10, we study things like this, right? We get case studies. We know that it's not just sufficient to have just receipts. If for meal deductions, right? We need to know, okay, well, who were you dining with? What were you talking? What was the purpose of it? Were you just dining to dine, or are you actually talking about something pertaining to your business? So all of those things are really pertinent to be sure that you can get these deductions.
And a really good way to keep track of that is having meeting notes. If you are realistically going to have a meeting, a meal for the purpose of your business, then you need to have sufficient notes where you document who was present, what purpose they serve in your business, and the conversation or the topic at hand that you guys discuss.
Correct. So that is the case study as is. Those she was denied those deductions because of, I wouldn't say lack of record keeping, but lack of detailed record keeping and knowing exactly what needs to be kept. So if you frequently deduct mileage or are starting to this year, and or meals, definitely take heed and take note of the things that we spoke about today. Make sure that your records, whether you're keeping them yourself or if you have somebody that is working on it for you, make sure you're touching bases with them and saying, hey, I'm just making sure that I'm providing you with everything, and give them all those notes and details so that way they can keep good records for you in case the IRS comes and says, oh no, we're not going to give you this. You can say, yes, you are, and this is why. So that's our lesson of the day, really.
Correct. And guys, I just want to point out that a good defense for the IRS is not, well, I gave it to my tax preparer. I gave it to my accountant, and they didn't do their part. It's your job as the business owner to check in and to understand what's going on in your business. So don't just give your documents or your receipts or whatever to someone. Actually work with someone who is going to give you that advisory piece, who's going to do those quarterly check-ins, who's going to make sure that you are aware of what's going on, and that will bring up certain things to your attention so that way you can continue to be profitable. Any questions from anyone that's watching?
Give it a few seconds for them to type some things out.
That was a really good case study, Max.
Yeah, when I was reading it, I was like, see, there's a lot of things that you just have to be diligent about as a business owner. And partially that's why, well, not partially, 100% is that's why we're in business, right? 9 times out of the 10, you are wearing so many different hats. You are creating the things, marketing the things, packaging the things, selling the things, meeting with clients, doing all these other stuff. Is really hard to keep up with all of this if you're not in this type of business. So that's why I say, in the beginning, some form of bookkeeping is better than no form of bookkeeping. But as you continue to scale, as you continue to grow, as you continue to secure your bag and all these things, make sure that you're scaling yourself and aligning yourself with people who are going to make these type of things easier for you, that are going to dot the I's, cross the T's, make sure they have your back, because it's easy to overlook these type of things because you could be running to the post office and you forget to track that, and and then it all goes haywire from there, so have someone on your team who is going to really be sure that they're capturing these details for you.
Absolutely. And like Maggie says, all it takes is 1 or 2 transactions. You lose track and things can spiral out of control really quickly in our industry. And then next thing you're 6 months behind and trying to play catch up at the end of the year. And that is not, I can assure you, that is not the best time to call your tax professional and say, hey, I am 6 months behind, because we're going to have a straight attitude. Straight attitude.
Yeah. All right. Well, that is all we had for you guys today. Just wanted to come and talk about mileage, meals, bookkeeping, tracking, just being diligent. I know that running a business is a lot. And I know that we're probably just through a lot of people like, oh my goodness, now I have more things that I have to take care of. But that's what we're here for. Please make sure that if you're not already, you can both add both of us on Facebook, because on our personal page, we do give a lot of nuggets. But also our business pages is where you'll get like streamlined information, All Aboard Financial, Secured Financials LLC. I have a new website. It is still under construction. I have a great landing page that still goes over pertinent information, as far as you can still book an appointment with me on securedfinancials.net. And you can also see all the services that I offer there as well.
Absolutely. And you can find me at allaboardfinancial.net, where you can book an appointment, see all the services that I offer as well. As we always say, we are tax sisters, guys. We offer very similar services. But listen, our goal is for you to follow the both of us, and to get information. Maggie may share something that you may find extremely helpful one day. I may come back with a tax tip that's beneficial the next. So be sure to follow the both of us. Again, I'm All Aboard Financial, and she is Secured Financials LLC. Be sure to follow our business pages. You can friend the both of us. It's okay. It's all right, y'all. And yeah, we look forward to any questions that you guys may have. If you're catching this on the replay, just hashtag replay. And then if you have questions along the way, please do not hesitate to drop them. We will be checking back in to follow up on questions.
Yes. All right, guys. Well, I hope we didn't take too much of you guys' lunch hour. I hope everybody has an amazing week. And of course, if you need anything, like I always like to say, my business in my inbox is always open. So message me if anything.
All right. You all have a great rest of your day. Bye.
Bye.